Thursday. Wow, it's another so happy it's Thursday day. Don't know if you guys saw, but in the world of Web3, it was announced that Entropy has taken over the Catalina Whales Mixer project, and now Catalina Whales Mixer has a fresh start and has some banging things planned or in the works. They're happening this year. It was all revealed in an announcement posted in the Discord and then shared and discussed on X Spaces. So again, if you're not in that, check it out. Go see Catalina Whales on X. Go to their Discord, read the announcements channel. Listen to the X Spaces from last night if you want to. I highly recommend it if you're into Web3, NFTs, crypto, blockchain, all stuff. And if you like some projects that are all about prestige worldwide, man, right? Great projects, great projects. It's been around for a few years already. It has new owners that are dyed-in-the-wool owners and holders of whales since many years. Practically since the project began. Literally, there are whales. Since mint day, that are still holding, who never sold. But every whale holder is basically a stakeholder in the project, obviously, because, well, you own a stake in the project, right? When you own a whale or when you own a Nakamoto whale, right? And POW tokens, the meme coin, are being launched this month, January 2025. So keep an eye on that. It's going to be a Solana-based token. It's going to be pretty cool. If you have any Catalina whales, the OG whales, you're going to get POW tokens, and you can claim them up to every 5 days. And that'll be a good thing. Plus, the Nakamoto whales collection is, obviously separate. And there's gonna be some really cool things, mixtures and whatnot. But anyway, so back to Bitcoin real quick. What is happening in the world of Orange Coin? Why did it dump you more yesterday? But Yoshi, you said after it distributed away, it was going to mean revert. Yeah. And it did. And then it distributed away some more. Depends on the time frames you're looking at, right? If you're looking at the 15-minute time frame, definitely did that, right? Or lower time frames, it did that multiple times, right? It mean reverted on Tuesday. Right after that pump, completed that mean reversion Tuesday, Wednesday, and then dumped on Tuesday, meaning it distributed away from the mean. Hello there, I see your message. And after distributing away from the mean on the downside, it mean reverted yesterday, right? And then what happened? Once it completed those mean reversions on the lower time frames, right? Well, it distributed further to the downside. Shortly after our live stream, in fact, on Alpha Trading. Then what happened after that? It mean reverted, and in this case to the upside. So, again, all the returns do is distribute and mean away, and mean revert. Right? They distribute away from the mean of returns, and they mean revert to the mean of returns. And all price action does, if it does anything, is it follows the returns, right? Sometimes it's not in step. Sometimes it takes 1 or 2 or 3 steps out of sync. But 99, whatever the percentage is, the vast overwhelming majority of the time, price action will follow the returns. And if it falls out of line within a few steps, it'll fall right back in line because that's what it does. Price action follows the returns. It's that simple. It may not follow it exactly every single candle, but it does eventually fall back in line and follow it. In fact, even when it seems out of step on a particular time frame, all you got to do is look at a different time frame, right? Usually a lower one that'll show you, actually, no, you can see here, most of that time it in fact was in line. There may have been some geometric Brownian motion, right? Some randomness that threw it out of whack for some of that time. But all in all, right, that, like I said, the vast overwhelming majority of the time, all the price action does is follow the returns, because that's all it can do, right? Why? Because price action is a result, right? Is a product of the returns on investment, right? Specifically the log returns on investment, but the returns on investment. Price action, literally, without the log returns on investment, there wouldn't, you wouldn't have price action, right? If you put in money into something and your profit or loss never changed, you put money, you invest in something, you put money on the market on something, and the returns never change. They just sit there. You get a 0% return. It just stays flat for some reason. Price action is not going to move, right? Why? Because there won't be a spread between the ask and bid price, right? There will be no volatility created. There will be no spread of data around the mean. What is the spread of data around the mean? Variance, right? Variance is another name for volatility. Volatility, again, is the standard deviation of returns, right? Standard deviation is that bell curve that you studied in class, right? And Laplace distribution is also a bell curve, but it's slightly different shape. It's the Laplace usually is a bell curve that's like narrower at the top and then wider at the bottom. Standard deviation is kind of like the traditional bell shape that's like symmetrical and easy to identify. It looks like just a regular normal distribution bell curve, because that's what it is. That's why it's called the normal distribution, right? So when you think about that, right, and you realize, it's actually the volatility that creates the movement, and it's the correlation to past price action, if anything, which specifically is that thing. The volatility plus the correlation give you the direction that creates, right, the actual returns, right? The standard deviation of returns and correlation gives you the returns. But you can say, well, wait a minute, how come the standard deviation of returns give me the returns? Shouldn't the returns be producing the standard deviation of returns? No. The standard deviation of returns, the correlation produce the returns, which produce the price action. Okay. I know it sounds counterintuitive if you're not used to it, but it's actually very intuitive if you know how it works, right? It's the moving parts, a bunch of moving parts, right? And you just have to realize in what order they're moving, right? If there was no spread of data around the mean, there was no volatility, then, and there was no correlation to the past price action, so no tendency of any probability of a directional move, then you wouldn't have any returns, because they would just be flat, right? They would just not move. If there was no ask and bid, if there was no delta between the ask and bid, and if that data wasn't constantly changing, well, then there would be no movement. There would be no returns, right? But it's because you have a delta between the ask and bid, because you have a spread of data around the mean, in other words, that you get the returns. and the price action follows the returns, right? And the correlation of the past price action, not the current price action, the correlation of the past price action with the volatility shows you the tendencies that give you the probable direction on the current candle and future candles, because that's what makes it forward-looking information. In other words, it is what we call leading information. Hello, I see you're posting flags. Well, hello to you. Yeah, so that is why Bitcoin dumped more yesterday. Right after, and on Wednesday, on Tuesday did we say take your profits on the shorts? Yes, we did. On Monday, did we say take your profits on the longs? Yes, we did. Were we right in both counts? Yes, we were. Why? Well, you could say, well, but yesterday you should be taking your profits on the shorts and it dumps harder. Yeah, and I also told you that if it dumps harder, if you have taken your profits on a short, you just get back in the short. And you had plenty of time to do it, just like you had plenty of time to dump out even more on the day before, right? To take your profits on that initial dump and then carry on with the next one, right? Plenty of time between the trades. But tell me what would have happened if it had gone the wrong way, right? If it had gone the wrong way and you would have still been in that, then you'd be hurting, right? But instead, if you took your profits, you're not hurting. You're not hurting now, right? Oh no, but I missed 0.5% of the move. Oh really? Okay, well, how about you didn't miss 100% of the move because it reverted in the other direction? Right? How about you didn't over leverage your trade, so you didn't lose out all your profits and then get wrecked? Look at it this way. If you realize yesterday when we were doing like the Alpha Trading live stream, we looked at the liquidation charts. There were like 189,000 traders who got wrecked in the previous 24 hours. 187th, whatever, some insane number, like huge football stadium, multiple large football stadiums full of people had gotten wrecked in 24 hours for like $500 million or something, just in crypto, right? Think about how stupid, and most of them had gotten wrecked on longs, yeah, when it was dumping, okay, but like a quarter of them got wrecked on shorts. What? Even more, like a third. How'd that happen? Well, it happened because dumb, right? People over leverage. Tiny little moves to the upside on a day that was generally going down, and people were getting wrecked on shorts. Makes no sense, except that they were trading with obviously 30x leverage or more. And because they were trading with 30x leverage or more, right, when they moved down 3 point whatever percent, if you add in their market fees, which a lot of them, if not most of them, use because they market order like fools, like on a regular basis, and you add in the liquidation fees, and you add in the network fees or whatever, they got wrecked. You think there's not people trading at 30x? There's people trading at 300x now on MEXC. You want to talk about degenerate gamblers. So don't be that. If you want to learn how to trade properly, come to the Alpha Trading Discord. It's at alphatraడింghq.com/Discord. Again, alphatraడింghq.com/Discord. And join the live streams. They are in the Discord. Usually Monday through Friday, starting at 11 a.m. Eastern Time. Usually Saturdays now at the same time. And then Sundays right around when traditional futures markets open. Like at that time or open of the crypto week right around then. Okay, that's going to do it for now, folks. So see you in the live stream later on Alpha Trading today. It's free. Join. And you can also watch it on wherever we distribute it else. All right. Peace, guys.